Good morning, everyone. Hopefully everybody can hear me. We are live on Facebook. My name is,
Good morning, everyone.
Actually, it's YouTube. We have a sound recall, as a matter of fact. Okay, so today, this morning, we are going to talk about passive income with income statement and balance sheet. If you understand the flow of income statement and balance sheets to get out of the rat race with asset protection and tax efficiency in your life, you are going to be successful with the flow of money. It's very, very important, whether you do the stock market, real estate, you have your own company. If you want to get out of the rat race, you need to understand passive income and the source of passive incomes and how they flow and an income statement and a balance sheet. Without that, it took me a lot of times, a lot of years, guys. I used to be an hedge fund trader. I used to work as a prop trader. It is until a financial advisor sat me down, explained how the flow works on an income statement and an asset perspective with asset protection, tax efficiency, and an income statement that you are going to really be wealthy. This is the moment where you have the aha moment. It clicks. So before we do our usual 30-minute sessions, at the end we'll do SPX, ES. Let's go over passive income mastery with income statements and balance sheets, and hopefully it will help you guys think wealth differently. Okay, so let's go. So I'm pulling an income statement, and good morning, everybody. Myron, good morning. Michael, good morning. It's good to see everybody. Hopefully everybody, if it's helpful, if you smash the like, it's always appreciated. Your comments, your engagement, it's always super appreciated, everybody. Good morning, Fred. So anyway, in order for you to be wealthy, anyone, whether you're young, whether you are like me over 45, right? You got to master the income statement and the balance sheet. So let me share with you. I just realized that we didn't have the share screen going on right now. So here you go. You have an income statement and a balance sheet in front of you, guys. Income statement, pretty simple, right? It is the way, right, money flows. So here you have your salary. Let's say you make $10,000 a month, right? And here's a thing that we use a lot at the day trading zones and think wealth differently. We get income from our dividend. A cool thing about the income of dividends is tax. They are taxed, at a lower rate, long-term capital gains, So super important. Then some people have real estate investments, so they have rental checks, rental 1, rental 2, 3, 4, and they get some passive income from there. So here, how is it flows? You have your salary here, and this is a very cool game that you can play, the Cash Flow 101 from Robert Kiyosaki on passive income, getting out of the rat race. So you put your salary here, $10,000. Here you put all your source of passive income, your dividends, your cover costs, because to me in the stock market, we have different sources of income. We sell income. So what do? I sell credit spread, right? So this is part of my monthly passive income, credit spreads, selling puts, right? That's part of it. Cover call on my stocks, where I own the stock as an asset, and I'll show you how it flows, right? But this asset creates passive income or income with minimum of work, right? Because there's not such a thing as completely passive, Passive is an illusion. We always work. If you have rental property, you still get phone calls from your property manager, or even worse, if you don't work with a property manager, you have tenants calling you for toilets that are clogged, plumbing issues, lawsuits, or whatever. So that right there, The real estate market is absolutely not completely passive. I can tell you that by experience, right? But here it's fairly passive, selling credit spread, put, cover call, dividend. Especially at the top of the cycle, I urge you to go back to my previous live event from last week, where I explain on any phases, different phases of the economical cycle, what should you invest to be wealthy and at what point. There is a point where real estate, company creation, long-term investing is not the appropriate time in the economical cycle, especially if you're at the top. And right now we're at the top. So on the income statements, when you add your salary plus your passive sources, you have your total income. That's your total income here. Now, if you subtract your total income, your passive income, plus your income from your company or from a job, right, a W-2, if you're a W-2, then you subtract that. So we go down, right, we clear that, and you subtract that from all your expenses, right, your home mortgage, your school payment, your car payment, your credit card, or your loan payment on your rentals. That is what is a monthly cash flow. So why is that super important? Because when you master that, your monthly cash flow right there, if your monthly cash flow is positive, right, well, that's good. You can save money to buy more assets here, which creates more passive income here, right? So it's a flow, a control of flow that you must master, guys, to be really successful in terms of passive income. And I'll touch about the pyramid, the 3 triangle phases of how do you create passive income. So number 1, you need income from W-2, a job, or you create a company, or believe it or not, you do both. You can be an employee and have a side also where you are passionate about, you have skills that you can bring to the world that you can monetize. That's number 1. Number 2 source of income is what we do now for almost 25 years, is the stock market, stock as assets, right? And creating income with those assets, as I have explained in one of the live YouTube video last week or the week before, that is another pole of income on the trifecta of wealth. The third one for income and passive income is going to be real estate. That's it. There's nothing else. It's going to always revolve as a company, a partnership, or W-2 income, number 1. Number 2, stocks, assets, income, and options market, because the options market helps me create the income with my stock as well as collateral, and the real estate market, right? That's it. It's always going to flow within one of those 3 for you to be successful. So again, if you go back to asset and liability, now you enter the balance sheet. But before we go to the balance sheet, I want to go back here on asset and income and expenses. Look here, and this is super important. This is how you become financially independent. If your salary becomes 0 and you get fired or you don't want to work anymore, no more work, right? But over a period of 10 to 25 years, you've increased your passive incomes, your monthly dividends, your monthly puts, your monthly cover calls, your stock income, right? Plus your real estate, plus maybe you get also what's called a K1. I get K1 from being a partner in other companies, and I have other people working. I'm just a partner, and it's called a K1 income, right? So you have K1 income, you have dividend income, you have real estate income. If that number here, let's say that number replaces your entire income, and let's say it becomes 9,500, not quite your 10,000. And your total expenses here, right? So 0 salary plus your passive income, 9,500 minus your expenses. Let's say your expenses are, I don't know me. Let's say your expenses are 8,900. Guess what? You are out of the rat race. Not only do you finish with a $600 positive net cash flow every month, but you don't even have to work with it for it, because your net passive income is superior to your monthly expenses. And this is why it's very important if you want to be successful. And again, if this video is helping you and you're watching now, this is the type of stuff, guys, that I appreciate, because get engaged, put some comments, some likes, because that changes your life. It changed my life. You know, I was a trader. I was a prop trader. I was a hedge fund trader. I did not understand the flow of money properly till I was about 37 years old. So it means that I've understood really applying this principle of passive income, creating passive income, creating a strong balance sheet for only the past 10 years of my life. And I'm sure I'm not the only one. I'm sure there's people watching this right now or will watch the replay, right? And these people have not created enough passive income in their life. They keep going at a job every day. They are going to wait 65, 62 to retire, which there's nothing wrong with that. But there's something wrong to not create passive income, because you are in the rat race. You are like in a wheel. It's like a rat on an hamster. You keep on running and there's no end because it keeps on coming. It's like washing dishes. It never stops. It's like paying bill. It never stops. Whether if you increase those passive income, your K1, the stock market income, the options market income, the real estate market income, if you keep on increasing these, you can afford to lower that, which is your sweat equity. You trade time for money. And if you trade time for money, you're a slave. You have not created passive source of income that helps you sustain a lifestyle, right? That allows you to make money while you sleep. You know, when I sell income and I sell options, and there's that time decay going in my favor, every day that decay works in my favor. That's a source of passive income, because I don't need to give more time into the trade. I don't need to give more time. The passive income, the decay of the options helps me make a little bit more money every day. Now, balance sheet, okay? And this is why I try to make those sessions now live every Tuesday, 8:45, sweet, short, to the point, but powerful, everybody, before I give you the ES SPX analysis. Going forward, when our iPhone is going out soon, we will give you the ES and analysis for free on the iPhone app. That's it. So we don't have to do it on the live stream. Now, clear that. Let's go to the balance sheet and then turn it around with the income. So what is a balance sheet? Very simple. It's a picture of your financial situation. So you have your asset on one side of the balance sheet, you have your liabilities. So on the asset, you might have, I don't know, a rental property. That's an asset. You put a down payment, you have a cost for the property. It goes here on the right side, it becomes an asset, liability, because you pay for it. Most likely you put 20% down on a rental property, right? But you have to finance 80% of the rental property as a liability, right? When you do that and you create assets, ideally, I want an asset that provides me more passive income, which what? So if I buy dividend stocks here, you know, so I give you an example, dividend stocks like AT&T at 6%, right? I want that asset here, and by the way, I pay this with my cash, so I reduce my cash levels here, doesn't affect my liability when I buy stocks and dividends. I go here and it goes back and it reflows into the income on the income statement for more passive income, right? So I'm buying more passive income. I'm buying a rental. I put it in liability for 80% of the mortgage, and now I'm getting passive income. And let's say I have a net cash flow of $250, right? But the problem with this $250, especially at the top of an economical cycle, you have risk of lawsuits, you have risk of people not paying you, you have people where the house stays empty for a couple of months, right? And it eats all your cash flow. You have to change the HVAC, and that's it, it's gone. HVAC replacement, $4,000, $5,000, all your cash flow is gone. But what I like with real estate is that you pay down the mortgage, so you make money, you have rental check, and you have tax advantages. So I love that. But it's not passive, guys. There's a lot of headache that comes with that. So to me, if you want to be wealthy in real estate, start by your own house, you know, and roll the equity into a bigger house and bigger house. And then eventually one day, I have a friend in California, he keeps on doing that every 2 years, tax-free, you know, he renovates it, lives in it with his family, and go higher and higher. And he's going to sell his house in California for $1.6 million. And now guess what? Now he's going to relocate not too far from us in Georgia, and he's coming and he's going to buy what? A $580,000 home. So now he has his $1 million from real estate because every 2 years to 5 years, you know, for the past 25 years, he's buying his own house. And he didn't deal with tenants. So that's house hiking. Another thing in real estate you can do that is pretty cool is you house out. You buy a triplex, unit 1, unit 3. You live here, you rent 1, rent 2. Those pay for 75% to 100% of your mortgage, you know, and you can finance the first unit with a 3% FHA. So you don't even have to put a large down payment to be successful. It's called house hiking. But overly speaking, when at the top of the market, you want liquidity, the stock market, the options market is very easy because you get in, you get out from your house. You don't have to put the house on the market, be dependent on contractors, dependent on the market. You know, I have real estate investment. I can tell you for sure it has been a big pain on my butt for the past 10 years, but it works. It works, but it's a big pain. And I think people should not be extended. People should have, like they talk about the 10X and buying apartment complexes and this and that. I think if you buy your own house, you move to another house, you rent your own house, you go triplex here, you house out at 3%, you do stuff that are kind of safe, but you progress slowly, surely to have 5 units to 10 units in your lifetime, and you pay them down. That's the key. You pay them down with a 15-year mortgage. I'm a big fan of the 15-year mortgage because the 15-year mortgage, what it does, right, is that it creates from the get-go where you pay more principal than you pay interest. Why is that important? Because people who take a 30-year mortgage are in the illusion that they own a house. When you're on a 30-year mortgage, you rent. It's like renting because your interest payment is way superior to your principal. You have minimum, tiny, crappy principal. So you are not accumulating really equity. You don't force the equity by the pay down. I love 15-year mortgages. All my houses have always been in 15-year mortgage. If it means that we don't have to enjoy life as much during the month and be at Starbucks every day or go in luxury restaurant, I'm telling you, over time, you'll be so happy to force your equity on a 15-year mortgage, right? So all of these assets and liabilities, you want liabilities. They tell you liabilities bad. Yeah, car loans is shitty, excuse my French. Credit card debt is crap, right? But debts like an equity an HELOC or bank loan, even credit card debts, if it is to buy more asset here that provides you more passive income here on the income and structures are beautiful. This is how people get wealthy. And this is how eventually, slowly, surely, we go back to square one. You accumulate more passive income that will replace your salary, that will be superior to overall expense and get you out of the rat race. So if this was helpful, everybody, super appreciated if you can put likes and comments. Those are experience of my life, guys. This is how I became something in terms of my financial health, everybody, and my net worth. You know, I'm not going to brag. I'm just telling you that those are principles that have changed my life, that are changing my kids' life. I have one of my sons at the University of UGA in Georgia. He 21 years old, you know, got an HELOC. With the HELOC, what did he do? He house hike right now, and he doesn't pay his mortgage. So there's 5 bedrooms in the house. My son lives in 1 bedroom. He rents 4-bedroom at $550 a month. He covers the mortgage and his positive cash flow. So he's already learning at 20 years old. He's going for a major in accounting to be a CPA, right? He's learning already at 20 years old, everybody, the power of doing those concepts, creating an asset, creating the right liability that creates the income, that provides the positive cash flow, and he is dorm free. We are not paying any dorm tuition, rent, or dorm cost, because he's doing this house hack at 20 years old, and the house is under his name. So he's already having an asset that is helping us pay back the equity line and the loan that we gave him. So this is life-changing concept, everybody. This will help your kids. This will help you if you are too late in the game. And as a matter of fact, I have news for you. I started at 37. I'm 47. It's never too late. If you are even 50 now, and you have 20 years in front of you, you have 15 years to 20 years to change your life. One person can change their financial life in 10 to 20 years if you bust your butt. This is like absolutely super, super powerful. So let's go in the stock market. I'll give you the ES for the day and we'll be done. We'll go in our tools. Here we go. So our retail tools, double cloud tools for the day trading zones, think wealth differently community. Remember, we are a community that trades real money, real account, real profit and loss for the year that we publicly show on YouTube, and also helping traders with analysis and tools, and the institutional traders, money managers, fund managers, hedge funds, small hedge funds, and CPAs. Now, market still in an uptrend. Now, if you look at the double cloud tool, we have a first line of support at around 29.63. When 29.63 cracks, we have a high chance of 29.08. 29.08, we have a big chance of 28.61 on the ES. Well, 28.61, 29.08, 29.62, right? So even though we would retrace here at 28.62, let's say there's a quick black swan of a couple of days in October, beginning of November, this will still be an up cloud with a buying opportunity. And this is why you never want to be counter trend. The market, the stock market, will only shift below the 28.60, 28.75. You see there's a big drop after that to go towards the 28.530 and maybe possibly retesting the low from December 2008. Let's go to the full pro tool. I'll help you for the rest of the day. Share the Gyazo, the image with you guys, and then we'll move into our live mastery room at Zoom for the mastery traders if you are watching right now. So our full pro tool shows still up arrow, blue dot, still an uptrend, but we like to divide everything by a box and creating a box where ping pong can happen. The box is here. We talk. It's confirmed here on our full pro tool around this 28.76, 28.55. So we'll call it the 28.62. So I'll take a pen and show you for the market. You got to prepare. So here's one box. There's a box from here, the blue dash, to the pink dash. Then there's a bigger box from here to be here. And then we have space. When you have space, that means the market can crash and has a lot of space to go down. And I would call that a sell zone for the entire market, all the way to that 25.75. And then above here, you have space to buy. And in between, you have to be dangerous. The box is dangerous. We call this a caution zone where we sell income. Now, this is precisely where we sell income. Why? Because we don't want to be caught up in that crap here where it goes up, down, up, down. We want to sell here, collect, below here, collect, bam, you collect here in the buy zone by doing put credit spread and all other strategies, right? We do combo trades that we call the combo trades to reduce cost basis, right? You buy here and you got to be careful. So the box is going to start at about, I told you, the 28.70. 28.70, we move up, 29.25, right? You move up. I'm going to clear everything and open the box so we know we see it better. 29.25, 29.52, which held pretty good last week. We go to the blue dashes support for the morning, 29.63, 29.63. We go here, 29.76, 29.76. We keep on going up to the resistance of 29.92, which has been almost the resistance of the overnight at 29.94. And then we get to retest the previous high, the all-time high, 3,029.5. After that, we have 3,050. So let me put the number and show you after the work being done. So we put here, and all of this also helps us creating passive income because we are doing option strategies around the SPX options, the ES options, the SPY options that are going to help us. So, and again, as always, if you guys appreciated what we do, your likes, comments, engagements are appreciated. If you want more live stream like that every week, because it takes time, and even once a week, you know, we come, we do it. Usually we are with our group, as a matter of fact, live. So 29.52, 29.62, 29.76, 29.92. Well, I'll take the round number, 3,000, 3,029.5, 3,015 new high. I can't even put 75. Caution zone for this morning, same, 62, 3,000, everybody. As a matter of fact, here, 92. This is your caution zone. Below the 62, we accelerate the downside. And above the 3,000, we accelerate the squeeze and the retest, possibly the retest of the all-time high. So this is the market. This is the zones that we have for today. Let me see if I miss anything that could be helpful for you. I have a 3,015 in between here that could help you. 3,015. And that's it. So I hope, again, everybody, that this was helpful, because at the end, I'll put the camera back. Understanding the flow of income statement, tax efficiency, asset protection on your income statements and your balance sheets is everything for you to be successful. As a matter of fact, one more thing. If you look here, the second thing here after all of this that we explained is how do you get the asset protections? Those are boxes where you title all your real estate investments, your stock investments, you put them in an LLC, you put them in an irrevocable trust, you put them in a trust so that if you get sued, nobody, it's like a castle, nobody gets them. There's state law and federal law that can protect you if you understand simple concept of asset protection and insurance and stuff that can help you in your life. Hopefully this session was helpful. It was all about passive income, mastering income statements and balance sheets. Be out of the rat race where your passive income is superior to your monthly expenses to be successful in life. I'm telling you, it was not until I got those concepts that I really created true wealth. You know, just trading, just doing options and stock is not enough. You need to understand that all flow of the income statement and the balance sheet with tax efficiency and asset protection. I love you all. Everybody, you have a great day. I'll see all the mastery in the Zoom room live right now. Take care. I'll see you next week. And you have a great week, everybody. Bye-bye.